Hello my YouTube friends, this is Richard, founder of Short-Term Rental University and Airbnb Superhost, and on this episode I want to talk to you about the prospect for rising interest rates and what you should do now. So it's no surprise that the Federal Reserve has indicated in the past that we would be raising interest rates, and that basically means how much it costs to borrow. Mortgages are a significant portion of what people borrow money for, and when interest rates go up, mortgage rates tend to go up. What that basically means is that every single mortgage costs more money, and therefore people are willing to pay less for real estate. So it's an inverse relationship. Mortgage rates go up, real estate prices go down. So depending on where you are in the cycle, these are things that you need to think about. There was a real expectation for the Fed in Q4 of 2018 that they were going to raise really aggressively. In fact, the Federal Reserve Chairman was indicating a very aggressive stance, and Wall Street did not like it at all. We saw a huge correction. I mean, there's a lot of different things happening. There was the rising prospect of interest rates. There was China trade wars. There was Trump and the government shutdown, and all these things created uncertainty, and so the stock market rolled over really quickly and bottomed in December of 2018, December 24th. But since then, the data has come out, shows that the economy is slowing. We're not in a recession, and we don't anticipate a recession anytime soon, although rest assured, one will occur. We just don't know when. So right now is kind of the time where, depending on where you are in home ownership, you should start to think about a couple of things. So the prospect for rising interest rates going up was really high. The Federal Reserve has now said we're going to watch the data. He's sort of tempered his statements, and now Wall Street thinks that there might be one hike in 2019, down from like 4. So we're in a period of quietness, and this is a good time for you to assess whether there are things that you want to sell, assets that you want to sell. Almost all assets will be worth less in a rising interest rate environment. So if there are stocks that you want to sell, you might want to do that now. If there's homes or property or land that you want to sell, now is a good time to consider doing it. The flip side of it is, if you want to be a buyer, you might want to wait for a little bit because you might be able to get that home or that land for less money, say 6 months from now or a year from now. Again, the timing is really uncertain. In fact, all of this is just prognostication. I don't really know. But what I do know is there's a very strong relationship between asset prices and interest rates. And that's why in a declining interest rate environment, you get what's known as an asset bubble. Everybody keeps bidding it up because money is cheap. You can borrow money for practically free. And so therefore you can afford to pay more because you have access to money. In reverse, when money's really expensive to borrow and you can't really get it, and it's really hard to get money, you're going to be a little bit tight with that and you're not going to be willing to pay as much. It suddenly becomes much more important that you get like a great deal, right? So like that's the human psychology behind all of that. You don't have to worry about the methodology. Just think of how you would feel. If you had access to huge wads of money, you'd probably spend freely. If you had very little money, you'd probably be much more conservative with it. Multiply that by everyone that's buying everything, and you start to have real psychology and real economic impact. So get ready for higher interest rates, whether they come or not. I don't know. Whether they come tomorrow or not, I don't really know. But the next move in interest rates is up, likely an inflationary period as well. And so therefore asset values generally should come down. So if you want to get out, think about doing it right now. If you want to get long and buy something, probably a good time to sort of sit on the sidelines and wait and be patient. Let me know what you think about rising interest rates and what assets you're thinking about buying or selling and what you're doing about it. Am I right? Am I wrong? I mean, this is kind of consensus. I'm not telling you anything that you couldn't hear or read about, but hopefully I've explained it in a way that resonates and it makes some sense to you, because I know sometimes I read the newspaper or watch it on CNBC and it's like, wait a minute, can you slow it down a little bit? So I'm just trying to explain in layman's terms what's happening at the macroeconomic level, because the macroeconomic level eventually drives the microeconomic climate. You and I operate in the microeconomic climate, so let's see what's going on outside upper macro forces that might drive our buying needs and the people that are staying with us and buying and selling from us. That's how this all works. I hope you found this video helpful. Please like it and subscribe to the channel. Thank you.